You're trying to get across to the traders to get them on the right path, and maybe some of the takeaway points.
Sure. I think the most significant thing to me in my work is what I'm teaching people now is exactly what I was doing in 1970. So the conditions that cause markets to move are the same. And I think that's really significant. While the markets are different, I don't trade pork bellies anymore because they don't trade anymore. The markets have changed, but it's conditions that move markets. I don't think charts move markets. I think conditions do. And those fundamental conditions are the same now as they were 10 years or 20 or 30 years ago. It's all about conditions, and then bring the technical stuff in on top of when I find a market that's set up to rally or decline.
So by conditions, you mean sort of the combination of fundamental supply and demand, economic, what exactly are you referring to?
Well, those will be part of them. We have developed an index that will allow me to see if a commodity is undervalued or overvalued, absolutely undervalued or overvalued relative to the price of gold. And I would look at something like the Commitment to Trader report, which I pioneered way back in the 60s. Because when the vast majority of commercials, the big financial interest is long or short of market, it's going to have an influence on the market. There's a good example. Or right now the Goldman Roll. Goldman Sachs rolls forward contracts every month for the long only funds. There's billions of dollars doing that. Will that have an effect on the market? Of course it will. So a trader better know about that. That's a condition that we need to use to trade the market with.